All right, if you wouldn't mind reintroducing yourself, we are hearing from Nicholas McCarville about
Okay.
appealing your property tax valuation. Thank you.
Yes, I'm Nicholas McCarville. I'm a property tax attorney here in Florida. Office is in Aventura, and been doing this for almost 20 years now. People in the office have been doing it for a lot longer than I, but that's all I do, specialize in this area. I spoke to the group last year, and I've got some prepared remarks. I'll go through how property taxes are calculated, how they're fixed, and then what the value adjustment board process is for challenging those values. And then we'll have some time afterwards, maybe talk about Amendment 3. But as I said before, property taxes are a component of two things: value times millage. Value set by the property appraiser. You've got actually some recourse to that. You can challenge your value. That's what the value adjustment board process is for. And then the millage, which is set by the county commissioners, municipalities, school boards, things of that nature. They attach a rate, a mill, to the value, and that equals your property tax dollars. There's also something that you're going to see on your trim notice if you've got it. It's very common in Broward, not so much in Dade. Other parts of the state, it's kind of hit or miss. I work all over the state, so we see things all over, and different counties do things different ways. Broward has a tendency of putting a lot of value or a lot of tax dollars attributed to non-ad valorem assessments. And that's kind of a misnomer. It's not really an assessment based on value. It is if you have a subdivision of, say, 1,000 homes in a subdivision, what they will do is each parcel will be a value to whatever the fee is. So I think Mr. Johnson in his opening remarks talked about a firefighter's fee. So if that fire department covers a certain area, each land parcel will be a portion of what the total is, and then that's just assessed. Has nothing to do with the value of the property. You could have a shack, or you could have a huge, 9,000 square foot single family home. It will not matter. You're going to be taxed as a portion of what you owe in that district. And that is something that I think is going to be very relevant with this Amendment 3, because you can't do anything about that. There's nothing I can do. It's just a fee. It's a tax you've got to pay, and you have no recourse to that whatsoever. But you see that frequently on your trim notice for Broward County, and there's nothing that I or any other expert can really do regarding the non-ad valorem assessments. And let's see here. We talked about the tax rate, mills. I'm sure you're mostly familiar with how that works. Each particular taxing entity gets allotted a certain amount of mills. They've come to an agreement on what their budgetary requirements are, and then they will assess a millage rate based on what they need to fulfill their budget obligation. There is a constitutional cap on that. Each particular entity can only assess at 10 mills. That's the cap. There was some talk with this Amendment 3 about capping that, but boy, if you do that, it's going to throw the state in a real mess. Millage rate is going to be, we have no recourse over that, but the millage rate is going to be very important going forward, because if Amendment 3 passes and there are all these caps on value, you have the tax dollars have to get paid somewhere. So what's going to happen is I think you're going to see a lot of increase in the millage rate. So every dollar of tax value after Amendment 3, if it passes, is going to be worth a whole lot more. So there's no language in Amendment 3 that talks about caps on mills. It's currently capped at 10%. But I do, and most entities in Broward, I think, if I'm looking at a tax bill here, I think the proposed millage rate for the city of Fort Lauderdale is at 4. They could go to 10. And so I do think that you're going to see significant millage increases if Amendment 3 passes. But the main thing that you can do here, and since we don't have Amendment 3 yet, it's value. And how does that work? So value in the state of Florida, they call it just value, but that's synonymous with market value. So what that is it's it's an arm's length transaction. So if you have a single family home and it was sold, put on the MLS and sold to an outside buyer, an arm's length transaction, you've got a broker, they've got a broker, and whatever value occurs there, that is market value, and Florida calls it just value, but it's really the same thing. You don't have to get too concerned about the misnomers of how they define it, but just value is market value. Market value is what you're going to see. There's two numbers on your tax bill that you're going to see. You're going to see your market value, and then you're going to see your taxable. You might call it assessed. Other counties may call different terms, but there are going to be two different values. And the difference in those two values has to do with what is taxable. So if you just bought a home, and I'm going to use a very simple example, and I understand that most of what we're talking about, or most of you are commercial owners, but I'm just going to, for ease of illustration, I'm just going to use a single family home. But if you have a single family home and it's sold for $100,000 and the property appraiser has assessed it at $100,000 market value, if you just recently bought it, your market value and your tax value, unless you have portability, is going to be the same rate. So what will happen is the $100,000 will be taxed with the millage of where it sits. That's going to equal your tax dollars. There's no difference between market and market and taxable. If you've had that for a long time, and let's say you've had homestead, and let's say you bought it 20 years ago, and same illustration, you got a $100,000 single family home, your taxable value may be 50. And the reason for that is the Save Our Homes cap has put caps on the increase in value years ago. There's a basis there wherever that was affixed. It can only increase at a rate of about 3% per year. That's the maximum it can increase. But there's a difference between the market and between the taxable. And what will happen in a homestead context is that the taxing entities, whatever the millages are, they can only affix the value to the taxable portion, not the market. So you're going to see some increase in tax savings there because you're not paying at the full market. If your neighbor right across the street just bought, their tax bill might show, the basis of the 100,000 times the millage rate. They're going to have, 50% higher tax bill than you, even though you've got identical homes, if you've been there for 20 years and you've got a cap. But the taxable value in commercial context, there's a non-homestead cap. And in 2008, there was an amendment that capped the increase in non-homestead property at 10% per year. So you've got $1 million industrial property, and it was the base $1 million in 2008, and it was affixed there. Now that property might be worth $5 million. Your taxable value has only increased at a rate of 10% per year over that period of time. So you're also going to see a difference in the tax bill. However, there is one key difference. In a homestead context, that tax bill, the taxable value is flat. And there's no difference between various entities taxing on different rates. For non-homestead, the school board, which is about, depending on what county you're in, about 40 to 60% of your bill, the school board gets to tax at that market value. So we often challenge values that have substantial non-homestead caps because we can still create tax savings for you. If we lower that market value, you're going to get that lowered market value, at least for the school board portion, times the school board millage rate, and that'll equate tax savings. So the non-homestead cap, there is a cap there, but it's not at 100% of your bill where the homestead would be. Let's see what else I can get into here. Because you're a commercial group, I'm not going to get into portability. There are those concerns too. You can port up to $500,000 of your cap value to a different property. There's some other exemptions. There's a widow exemption, a disabled veteran exemption, things of that nature that do get applied. And how those work is that they get applied to the value, and then that will affect the difference between the market and the taxable. And then the taxable will be how they actually send a bill to the people that have issues like that. So the main thing is we want to know how just value is set. And I told you an example. There's an arm's length transaction. Brokers were involved. We arrived to a value. And the property appraiser will get record of that. And they will use that most likely, especially when it comes to something where there's been public disclosure of a listing or something of that nature. They will use that value to determine what the just value is for your property tax purposes. Now, if you've had a property for 5 or 10 years, it's not been exposed to the market, what they're going to do is they're going to look at, in the sales context, they'll look at what similar properties were going for in the last year, and they will fix a value based on those sales because yours did not, it wasn't not exposed to the market. All 67 counties operate that way. What they use is the sales is a component of it. They use a CAMA system, and that's a computer derived assessment. So it's basically an algorithm. They put what the various sales data shows. They have some surveys to figure out what the rents are, the income on certain properties are, and they derive a value. And that value is what the property appraiser has put on your trim notice to give you a good indicator or a good notice as to what the value is going to be in the future years. The trim notice, there is one specific caveat, and they always have two different things. The millages aren't set until October, but the value is, for the most part, set now. They do make some changes up until the filing deadline, and I think that it's September 18th for Broward County. So you might see some changes in values, but if it's been put on your notice, there's a 99% chance that's what you're going to be taxed at as far as that value. The other things that go into just value, they're going to look at zoning, they're going to look at the physical building type, they'll look at economic constraints. If you've got some physical issues with your property, things of that nature, the CAMA system is supposed to look at those things, but they are not the best at always capturing that particular data. They will look at all title and public records. They will look at county mapping. They'll also take pictures too. So sometimes they will get owners that have put on additions or they have done something to their property. And if your aerial footprint has changed, they will compare and contrast that from years back. And so if you put an addition or a new deck on your property, they'll look at the changes between a couple of years and say, hey, you did something here. And then they can look at the permits, see if you pulled the permit, things of that nature. So whatever they can see from the outside, that may go into your tax bill. So they may pick up on some of those things where you may not think they will, but they have a number of different mechanisms that they can pick up on changes and then to understand the market of where your property is. Construction costs, things of that nature, that also goes into CAMA as far as what new construction costs would be and things of that nature. Now, after they've set a value, there are three ways to actually beat this value. And there are three approaches to value. If you've ever seen an appraisal, you probably don't see the cost approach too much unless you've got some new construction. The two biggest approaches to value be the sales comparison approach. That's comparing what similar properties are selling for. Like yours, they may make some adjustments to figure out, right, these comparables sold for this rate. If we adjust them because they're not exactly like yours, we think that that imputes a value for your subject parcel. That's a sales comparison approach. The other approach to value, and more relevant to groups like yourself, is the income approach. Now, the income approach derives a value based on looking at the income potential of that particular property. Now, how you actually operate in the market, that's important, and that's something that a tax agent like myself is going to ask you. They're going to want to see rent rolls. They're going to want to see income and expense data. And the reason we want to know that is because we want to see if you're in line with what the market is or if you're substantially below or higher. There is a market for, I'll just use industrial for an example. If you are an owner operator, you're basically going to set your rental rate. So the property appraiser is not going to consider your income and expense data as really relevant to the value because you've got so much authority that you can determine what the rate is, what your rental rate is, and things of that nature. Also your expenses. But if you put this out for rent, they will look at the rents that you're deriving on the property and the expenses that you're expending on the property, and they can consider that in determining whether or not they have put a fair value on the property. And agents like myself will spend a lot of time on the income approach because that is really where you've got the most juice to squeeze. Sales are what the sales are. Can't do a lot about it. We can distinguish sales, show that they're not as comparable with yours. But where we have a lot of room to argue is what the rents are. And whether you're getting market rents or you're getting substantially below market rents, we've got ways to arguing that. Same thing for expenses. If your expenses are higher than normal, well, that tells a story. There's a reason for that, most likely, that your expenses are higher. And because that your expenses are higher, well, you should have some kind of a discount for that. That should be considered in deriving what your taxable value is. And then after the income and expenses are taken into account, then you've got the cap rate. That's kind of the be all end all. That's how it's capitalized. And when you capitalize the NOI, which is your net operating income, that's income taking out your expenses, and you capitalize that over cap rate, that's going to derive what your value is for property tax purposes. And there, the cap rate, that's got a lot of issues that we can grab onto and potentially argue to your favor as far as getting a reduction, because sometimes they're a little bit aggressive and as far as what they think that your property is worth based on the cap rates. And cap rates can be derived on sales data as well. And depending on the type of market you have, they will have some evidence as for what that cap rate is, but we'll also have some evidence, and we'll have to advocate for that difference as applied to your property. The other thing that you'll see, or one thing that's a big consideration, is the highest and best use in the immediate future. Now, highest and best use in the immediate future is something that's very relevant. You'll see a lot with land. Now, if you've got let's say a dilapidated single family or a dilapidated multifamily, and it's in a poor condition, you're still renting it out, it's still functional, but it's not the in that particular neighborhood where it is, there's a lot of other development, maybe more denser multifamily development that's going up. And you've got this property that operates, it's just getting by. Well, what the property appraiser may do is look at that particular multifamily situation and say, well, you're getting these rents and the income based on what you're doing, it imputes this value. However, you would recognize a much greater value if you tore it down, sold it to a developer, and they could put something with a more dense use. And what they'll say is that the highest and best use for your property is not as it operates, but as what could be. But the difference on that is it can't be theoretical. It's got to be something that you really could do this in the near future, meaning in the next 1 or 2 years, not 10 years down the road. So the property appraisers can be pretty aggressive on that, what they think that you can do with your property based on sales or construction data that's going on in your particular neighborhood or where your property is. But that's another important consideration that sometimes, and we get it often, that, we hear it often in land context. Can you still hear me here? There we go. In a land context that, a zoning change has occurred. Well, if a zoning change has occurred, your property is definitely going to be worth more, even though you don't plan to do anything with it. Your plans are irrelevant. They know that you can, and they will tax accordingly. But there are some arguments we can make that, look, the highest and best use doesn't really apply in your particular situation because that's not feasible. And it has to be commercially feasible. And sometimes they can be pretty aggressive on what they deem is feasible versus what it actually is. We talked about the sales approach briefly, so I'm not going to get into that. I think most people just kind of generally understand how that works. You've got sales that occur, they compare it to your property, and you derive value that way. Let's see what else we have here. So property tax appeal. So if you got your trim notice, what do? Well, in Broward, which I think most of you are, you've got till September 18th to file an appeal. And what you're appealing is you're appealing the market value of your property and only your market value. There are some contexts where you can file an appeal if they've got your assessed value wrong. Say you had a homestead, they took it away for some reason. You can appeal and try to get that back on. That's a legal petition. That's not the vast majority of these petitions. You're challenging your value. And what you have to do, you've got to file an appeal by that time. The way it works is an appeal is filed in September. Hearings determine on whether or not that value is correct occur anywhere between October and in Broward, for the most part, May. Other counties, it's typically between February and April. That's kind of the end of it. A taxpayer has no control over when that hearing occurs. All you know is that if you file timely, you will get a shot, but you have no control when that occurs. So generally, and this goes for any advice, whether you appeal through someone like myself or you do it yourself, I would always tell you to pay your property taxes as stated in November. 2 reasons for that. One, you can control a 4% discount. If you pay it in November, you get a 4% discount, and that adds up over time. And the second thing is in 2008, when they had the last amendments on property taxes, what they determined is that you have to pay at least 75% of your ad valorem taxes and all of your non-ad valorem for that appeal to be viable. And every year we get a few clients that will file a petition. We get a reduction. They don't pay their taxes for whatever reason, and then that reduction just goes poof. They wipe it off the books, and your tax is as it was before, as if you didn't appeal. So if you pay in November, you don't have to worry about that. You get your 4% discount, and you're viable for the remaining of the VAB season. And the way you would challenge it at a hearing, you're going to challenge it based on mostly the two different ways. You're going to show the sales comparison approach applied to your property is wrong, and you've got an alternate sales comparison approach. And then you'll argue about the income approach at a value adjustment board hearing. The value adjustment board hearing, we don't go before the board in most cases. You'll see if your brokers, a lot of the time when I was becoming a broker, there were a lot of lessons on how a value adjustment board is constructed, things of that nature. As far as what I do, it's very rare that you're going to go before the board. What happens is the board will hire a magistrate, which for the most part is a judge that will determine what the value is. And most of the time that judge is an appraiser in the community, could be an attorney for legal issues, but they're better equipped to understand the arguments in a hearing, and better equipped to understand the value differences that an agent like myself would make, and then also the property appraiser would make to defend their value. And those decisions, they're special magistrates. That's what the judges are called. Those decisions, then they will determine whether or not they think it's fair or unfair. And they basically give that to the board. And most of the time, not all the time, but I'd say in the high 90s, 90, 98%, the board will rubber stamp what the magistrate decides based on that decision. So some counties, I do argue in front of the board, but it's most of the smaller counties, and it's pretty unique. Most time it's the magistrate. What you're going to want to do, though, you have to supply evidence. So you've got the burden. The property appraiser is presumed correct in a value adjustment board setting. Their assessment, they are presumed correct. So you got to overcome. You've got to show, hey, they didn't use the proper methodology. They may have used proper methodology, but they still didn't get it right. And you've got to show with clear and convincing evidence that, okay, they're wrong, and a new value should be created. Now, that new value could be what you present to the magistrate, and sometimes it is. And sometimes the magistrate will determine your evidence. They'll look at the property appraiser's evidence, and they'll come up somewhere in the middle. Still results in a reduction for you, but that's typically how it goes. And then other times, what may happen at the value adjustment board process is that you file a petition, and then it's looked at by the property appraiser, and the property appraiser may realize we were a little too aggressive here, and they may call and negotiate, and there may be settlement negotiations that occur. Settlements are good for a couple of reasons. One, that value is fixed. It can't be challenged at a later board or a later decision. The VAB can't undo the rubber stamp. So if you get a settlement with the property appraiser, you've got a reduction in hand. Sometimes that can be good. Sometimes they're reasonable. Other times they are not. But that does occur, and that can occur after you file the appeal. If you go to a value adjustment board hearing and you don't win, or you don't win enough, you still have recourse to file a lawsuit on the matter. Not typical. Broward County typically does not offensively sue. So sometimes in Dade, we have won pretty deep cuts, and the property appraiser in Dade files suit to override what the magistrate has determined and what the board has rubber stamped. They will file suit, and then we'll have to argue in a court of law about and it starts over again. Then you figure out what the value is in the court of law, and that's a bit different. It's pretty unlikely. Very often in Broward, you're not going to have that issue. There are some times where we might want to sue if we go to a value adjustment board hearing and we win, but we don't win enough, or we lose. We can file suit, and we do have some suits that occur from time to time that we offensively sue. But it is definitely not the norm, and it's a pretty unique situation that you're going to want to consider doing that. So who should appeal? Well, you're going to want to appeal if the property appraiser has increased your value dramatically year over year. And with the highest and best use, there could be some viable reasons that it did. If you've got a subdivision of similar homes and your neighbor exposed it to the market and got double what you thought it was last year, well, odds are that they're going to pick up that sale, look at your property, see how comparable it is, and then they're going to bump up your value too, because they've seen that similar properties like yourself have been exposed to the market and have received this type of a price. So there are some reasons where you might see some substantial increases. Zoning changes, things like that might lead to substantial increases in time. Rents in a particular area, if the rents are going up in a dramatic fashion, you may see on the income approach that the value that's derived with taking into account those new rents may justify a increase. Maybe not as much as they say it is, but you may see that. If you've lost your exemption, of course, you're going to see a pretty big increase. And then there's that legal process you can go to try to get that exemption back on. If you've recently purchased your property, and as Mr. Johnson talked about when we introduced me, see this a lot where the property taxes from the former owner are looked at by the potential buyer, and the potential buyer thinks that, oh, I'm going to pay taxes at this rate. You're not. You're going to pay it at a different rate. And the fact that you've bought the property for whatever you've purchased it for, if that purchase price is substantially higher than the just value that the property appraiser put on the year before, you're going to see your tax bill go up dramatically. Now, if you've got portability, you might be able to take that down different ways. But anytime that you purchase a property, it's going to reset any caps that are there. And you're going to want to appeal. And the vast majority of people that have bought a property should have it looked at by themselves or an expert to determine whether or not that they got it right. So if you bought the property, you definitely should consider appealing it because you've got some room that you might be able to knock a few dollars off where it is. So and also if you've built a property, you've made any substantial change or you remodeled or something of that nature, you're going to want to appeal. The other thing that you don't think about is if you had a fire or something that made your property commercially uninhabitable as of around the assessment date, you've got a very good shot at taking off a significant portion of your value. It's temporary for a temporary point of time until you get it where you can put it back on the market and realize rents again. So if you've got physical destruction or you're doing some kind of construction, physical destruction, or you're doing some construction of the property right around that December or November area, you want to have it looked at by an expert to determine whether or not you can appeal, because you have a lot of arguments that can be helpful to you during that time. And that's about it. That's how property taxes work, and that's how the value adjustment board process works. And I'll open it up to questions, and then also we can talk about Amendment 3 if you've got any questions on that or want some opinions on how I think that's going to work.
So Mr. McCarville, am I right in that the magic day is January 1?
You are 100% correct. It's January 1.
All right. So if they're saying what your house is worth on January 1, then what comparables are you using? Anything close to January 1, or can you use comps from the current year, 2026, or?
You can use them. There's case law that allows you to use some sales that occur after January 1, but they are not the best evidence. And it really kind of depends on your magistrate, what they determine, what they're going to consider or not. So in the context for this particular year, January 1 is your assessment date. The sales for the sales comparison approach, and then the market data that we would use is going to be the best evidence is going to be fourth quarter 2025. So market evidence in that fourth quarter 2025 is the most relevant evidence for using values for your property on January 1st. Sales that occur later in 2025 is the most relevant type of sales they're going to consider for your assessment purposes. Now, all of 2025 is relevant sales and market data, but that last half, and especially the last quarter, is the most relevant. Now, first quarter after the assessment date, yes, the Florida case law says that they can be considered, but it goes to weight, not admissibility. It used to be some magistrates wouldn't consider it at all. They say it's not admissible. We've tapped back on that, and no, it is admissible. It just goes to weight. You'd have to show. So if you've got a value, let's say that you close on your property February 1st. Well, there's a typical closing period. So you may have set the value, like the meeting of the minds as to value may have occurred right around that assessment date. So that February sale definitely should be considered as market value as of the first of the year. Just for an example. Now, if you use stuff that occurs right now, so if we're sitting here in August and September, no, they're not going to. I mean, the weight that any particular market evidence would be introduced at a value adjusted board hearing would be not given a whole lot of weight at the hearing.
And what kind of properties would they consider? So let's say, like in my neighborhood, I'm in a 2,500 square foot house, but there's plenty of 4,000 and 6,000 square foot houses. Could they be used as comps?
They could. They're not great as comps. They could, but they're going to have to use a lot of adjustments. And the further, if you look at value, it's concentric circles as far as comps go. So what's the best evidence? Identical homes. I mean, if you're drawing a concentric circle around, what the sales comparison approach, if you've got a tract home, you've got other in your subdivision, other similar tract homes. Well, yeah, that's great evidence what your value is because they're built the same time, typically the same builders, same construction, same neighborhood, things of that nature. And the further you go out from there, if you got different bedroom, bathroom counts, square footage, things like that, land, the further you go out from what is identical to your property, the more wiggle room you're going to have to argue, A, their assessment methodology is not the most correct, and B, you can supply something in the alternative. You might have to go farther away, different comparable neighborhoods. Yeah, in a sense, you want to be able to, go back on the property appraiser that if they're using 5,000-6,000 square foot homes and you've got a 2,500 square foot, you've got a pretty good shot at showing a magistrate that's not the best methodology that should be employed.
So one follow-up question is, what is required mechanically to file the appeal? And second, how do we go about, what is the process of having you do it?
If you do it yourself, you've got the deadline in your trim notice. It details on how to file that appeal. You've got to file the appeal either electronically or in person. You've got to pay a filing fee. I think Broward, they've changed the filing fees quite a bit. Last year, they didn't charge a filing fee. Now this year, they're charging a filing fee. You got to pay that filing fee. And then once you've done that and challenge the property, you've got to fill out. If you do it online, you got to make sure it's done correctly. And then you'll be in queue. You'll have a hearing that'll occur sometime between October and March. If you hire an agent like myself, we'll take on the responsibility of filing it for you, setting up the file, and then we'll take care of the evidence. We'll be notified when the hearing occurs, and we'll take care of the evidence production. We may ask you for information. Pictures are very helpful, income and expense, things of that nature. We may ask for information to help us help you to make the best case. But we'll take care of it, filing, and then we'll have a hearing within that time period in the next year.
And how are you compensated?
Well, there are a number of different tax agents. There's not a lot of us, but most of us work on a contingent basis, and that's probably the most beneficial to you. We would take a percentage of the tax savings that we obtain for you. Other than the filing fee, that's your risk. You're not going to have to pay any flat fee. I'd be very cautious and hesitant about any kind of AI property tax agent or anyone that offers to, hey, we're going to give you the case and you just go argue it for you. Well, you can have the best case in paper known to man, but you still have to argue and advocate for your position. And anyone that wants to charge you an upfront fee, not to say that they can't do it, but I'd just be very cautious of that. It's better to have an agent take the risk with you because we don't want to take files just to file. We don't make money on filing fees. We make money if we save you money, and we have an aligned interest, so to speak. And most agents are that way.
Do
Becca,
you
bueno.
cover, do you
I,
cover, oh, good.
I couldn't
I
hear you.
have,
What was that?
I have a question. Is it my turn, Alex?
Yes.
Uh, I, as a regular homeowner, okay, I just received my trim notice over here. There's a lot of numbers in there. So the
Yeah.
question is, what number should I look at, and how do I know I have grounds to contest those values? Okay, how do I know? I don't want to waste my time or going to a person like you to file an appeal when I have no grounds for the appeal. What gives me a hint that I should go look for a revision on my assessment or my taxes?
Well, the two things that you're going to want to look at, you're going to want to look at your market value and or just value. You're going to want to look at that, what they say it is for 2026, and then you're going to want to see what it is last year. If you see a dramatic difference between the just value, those 2 years, may give you some inquiry. Okay, I should probably have this take a look at. The other thing that's really important, and this is only applies to homestead owners. If you have homestead and you see a dramatic difference between your market value and your taxable value, there's nothing I can do for you. You're getting the lowest amount of tax dollars that currently available to you. So, if you've got and it depends on scale. So if you've got a $500,000 home and the property appraiser says it's $500,000 and your taxable value is $250,000, I say congratulations, you're doing the best you can. Nothing I can do. If it's say $450,000 and you're at $500,000, maybe there's something I can do. But if you're going to want to look at the difference between your market and taxable. Now, in a commercial context, not so much. I really don't care about that difference because remember, 40% of your 40, at least 40, could be more percent of your tax bill is based on the school board portion, and they're going to affix their rates on your highest value, and that's something that you've got grounds to attack. The other thing is valuation. So agents like myself, we work on a contingent basis, and even though you may have a valuable case, but if you've got something that's under $750,000, there's probably, even though you might have a valuable case, or a viable, not valuable, a viable case, you may have grounds to get a reduction. It's not going to be enough that where it's really going to make a whole lot of sense for someone like me to take it on a contingent basis. $500 tax savings meaningful to you, but if my fee is 30% of that, 35% of that, that's not a whole lot, and it takes a lot of time. We've got to prepare the case, we've got to argue the case. Those take hours out of our time. So if the value is under that 750 or so, probably not. There are other agents that may take that. We've kind of got a line in the sand around there. We may consider certain circumstances take lower, but most of the time, values lower than that, agents like myself will probably shy away from, just because there's just not enough fat on the bone to save money for both of us. You may be able to do it yourself and save something, but that's something to take a look at.
So do you have a lot of cases that people that come to you and just because they're fishing for some savings, but they call you and you tell them, no, you're wasting your time and you're wasting my time? Do you have a lot of cases like that? Because most homeowners, they'll be fishing for something. Like for them, $200 saving is good, but for you, it's nothing, right?
Right. Well, I mean, we try to do that a little more tactfully, but yes, we get a lot of those calls, and the vast majority of them are homestead related calls, and there's not a lot I can do there. Now, if you just bought the property and you had portability, I can help you there, even though there is a big difference. But if you just bought the property, and even if you ported tax savings from another parcel, the first year on the roll, yes, I can help you regardless of what that difference is. But that's that's not the most common type situation. But we get a lot of them. And look, I can assess pretty quickly on whether or not it's worth to take a risk. A risk as far as filing goes. So I have no problem talking to people if they want to take a look. I mean, I own many multifamily homes myself, so I get it. You want to save tax dollars wherever you can, but it has to make sense for both of us for an agent like myself to file.
Okay, thank you.
James, did you have a question?
Yes, yes. Do you fight property taxes in Lake County and Highlands County, Florida?
We do. Typically, though, you're not going to see them as the most aggressive. You're going to see the larger counties that are most aggressive with their values. And what I mean by that is that what we've seen historically in those smaller counties, they've got some discretion as far as what the value is. And they typically don't assess in a way that leaves a whole lot of room to reduce it further than what they put on. Not to say that doesn't happen. We do some on occasion, but it's more difficult in some of those smaller counties because they just aren't as aggressive with their valuations.
I've also heard that it could go the wrong way. They could increase your taxes also. Have you heard of that?
That's happened one time, and I think in Pinellas County a few years ago. Theoretically possible. I've never had it happen personally. We sometimes that we will challenge properties to increase it for portability purposes. We do that on occasion, so it can go both ways. But it's in 20 years of doing this, I've never had it go the wrong way.
I'm gonna contact your office because I own like 15 homes in Highlands County, and I own like 4 homes in Lake County. So I'm gonna reach out to you and see if your opinion is if it's worth filing those petitions and if you would file them for me.
The chief issue there is when we look at his valuation. So if owning 14 homes, congrats. That's a lot, and I'm sure they perform very well for you. But for property tax purposes, unless they're worth, the property appraiser says that they're worth over $750,000, probably not something that I'm probably going to want to take. Okay. Good for you to own, good for you to operate, not a great case for a property tax reduction. Now, if you've got new construction or if you've got a fire in the property that occurred or something like that, I'd take a look at that. But in an out of county, in a smaller county context, the value of the property that they say it is, that's going to be a major detractor as far as whether or not an agent like myself would want to file it.
Okay, so how would I go to you for you to evaluate those properties to see if you would take it or not? What's the process?
Just email me a list, and I will say this with a caveat: I will get it done in a timely fashion as far as not missing a deadline. But we have lots of that going on right now, so sometimes it's not the quickest at getting back to it, especially this time of year. But a list of the properties with the information as this: the county it's in, the address, and the best thing of all that you can provide to me is the tax ID or folio number, because that will allow me to look it up quickly.
Or I'll give you the trim notices.
I'd rather have it in a list so I can go.
Okay.
I can go quickly with a list. I can input it in my system and spit out the values here pretty quick.
All right. Thank you so much for your time.
Not a problem.
Are there any further questions before I ask Mr. McCarville to discuss Amendment 3? No? All right. So I have asked Mr. McCarville to make some remarks on Amendment 3. It's coming up on the November ballot, and I'm not sure how well it's understood. So as a tax professional, I'd like to hear your opinion.
Regardless of politics on it, now, do I think there are things that can be done to make some property tax reform that be better for property owners and commercial owners like yourself? Yes, I do. Is there waste, fraud, and abuse by some of the taxing entities? Probably. My opinion, as is constructed, I think you've got to be very wary about the unintended consequences of this bill. I do think that it sounds great to get a property tax reduction, but what I don't think that the authors were particularly honest about is what happens when you take, in Florida Tax Watch, and I would encourage you guys to look at that website. It's a nonprofit organization. They're kind of a watchdog of all things property tax and local. They've calculated that it's going to leave a $45 billion hole in county coffers to come up if these exemptions go forward. And what's really going to happen is that I think what you're going to see, the parts of the things that you can't contest go up and go up significantly. So right now, if the property appraiser gets it wrong, you've got a shot to correct it. And I'll give you just brief numbers. So in the value adjustment board process in Broward County, there were roughly 27,000 petitions filed last year. And of those, only about 9,000 were granted, either won at hearing or settled. So about 17,000 were wrong. Now, if you're talking about parcels that are, $700,000 to $800,000 parcels in Broward County, and only about 9,000 winning, that's not a very high likelihood of a chance to win. Now, that includes homeowners, that includes people that file that have homesteads that never had a shot at getting a reduction to begin with. But I exist because the property appraiser gets it wrong. Sometimes they get it right a lot. Now, I say that tongue in cheek. I know that you're looking at your tax bill. What do you mean they get it right? Well, they get it to a point where there's just not enough market evidence that I can do to challenge it. They get it right more than they get it wrong, but they do get it wrong, and they get it wrong especially more likely in the commercial realm. That's where we've got the best shot at getting reductions. If Amendment 3 passes, there is language that the non-Hempstead portion, instead of 10% increases year over year, it's going to be 5%. Well, if you couple that on with the massive exemption of homestead owners, I mean, they're going to be 150,000 the first year, 250,000 the next year, and then after 2028, supposedly indexed for inflation, but the Amendment 3 gives no framework or anything of that nature. It just says, well, it'll do that when it gets there. So it's not super clear cut as to what's going to happen after the first 2 years. But if you apply $250,000 exemption on all the homestead properties, and you couple that with a 5% increase in value, so you're taking away a ton of money from local coffers. Now, where's that going to go? Some, they may have to tighten their belt and the like, but in a lot of contexts, you're going to see big budget shortfalls. And what is that going to do to you? Well, instead of challenging value, what's going to happen is property taxes are a two-part system. You got value times millage. Your millage is going to increase, and it's going to increase probably dramatically. The Constitution has a cap of 10%. 10 mills for each taxing entity. But as I look at most taxing entities, they're around half of that, if not more. And school board is irrelevant. School board is going to tax you the way they've always taxed you, because these exemptions aren't going to attack the school board portion. But I think you're going to see a dramatic shortfall in budgets. I think what's going to happen is you're going to see a whole lot more of non-ad valorem assessments go through. You're going to see a lot of fees. You're going to feel like the government's nickel and diming you. I think that you're going to see service response times for EMS, police, road work, things like that. I think you're going to have there's unintended consequences. There's a wise man once told me there's no free lunch, and even though a tax cut sounds good, maybe, but I think you're going to see a lot of problems down the road. That's my take on it. And I say that not personally interested, because actually in the way this is drafted and the way this is done, it's not going to harm tax professionals like myself. We're still going to be able to exist to challenge values, because a dollar of value is going to be worth a whole lot more with an increased millage than what it is now. And that it's not going to cover any kind of new transaction, or if anything that would reset an exemption, still going to happen. And a lot of what we do is constrained to, new homeowners, new purchases, new construction, changes in corporate ownership, things like that, resets those valuations that we're going to argue anyway. I think you're going to see property appraisers get very aggressive with values. I think the values are going to be, they're going to be very aggressive with those. I think they're going to be very aggressive arguing back at hearings. And I think your millage rate is going to go up quite a bit. And there's nothing in the language that is going to cap that. There was talk about capping that further, but it's not there, and there's no state aid. So some of the larger counties are probably going to figure out how to weather that storm. But the smaller counties in the state, where the majority of their tax base are single-family homes, and if you're up in the Panhandle, you didn't see the massive increase in value. I don't know what they're going to do. There's no way that they can get aid from the state to come up with this budget shortfall. So the only thing that's going to happen up there is services are going to have to be cut. I think you're going to have a lot of unhappy people. That's kind of my 2 cents on it.
Do you think do you think your gut feel is that this amendment is going to pass? And the second question is, from your demeanor, I have the feeling that you would vote against it, that you don't like the amendment.
Like is kind of irrelevant. I thought my 2 cents is no, I wouldn't vote for it. I don't think it helps. I think it's going to hurt more than it helps. It may help a little bit at first, but when the counties figure out we're going to have to do something,
Right.
I think you're going to see services decrease, and taxpayers they like the services. I mean, the way it was framed, and I'm not trying to get political. I do believe there are things that could be done to help out taxpayers. I think this was pretty hastily crafted. And if you go to Florida Tax Watch, which is a nonprofit organization, kind of a watchdog, there's only one entity, one group that's come out for it, and that's the Florida Realtors. And I think they did that because they think it's going to allow more transactions to occur and attract more people to the state and increase values. But the other component is if you've reduced the property taxes so much, and so now the cost of ownership is lower, what's that going to do to value? Your property is going to be worth more, and the caps they're going to get eaten up. So you might have an increased value, even though the cap went up by 800%. I just don't think it was very well crafted. I wouldn't vote for it. Not telling you what to do or what not to do, but what I would encourage you to do is research it and just beware. There's no free lunch, and there are unintended consequences that will occur from this.
Yeah, my gut feeling is that I think the majority of voters, the majority of people, they don't go past the headline. So the headline of lowering property taxes sounds very good, and I think most people that will not do research, and they're going to go towards the attractive headline. And so if I were to bet on it, I would say that the amendment is probably going to pass. I have a lot of reservations like you do as far as is it good or bad. Right now, from what you told me on my personal feeling, I don't think it's a good idea the way it's being done. I think there should be a little bit more thought done towards it. But knowing how the average person thinks, headline, lower taxes, that sounds awfully good. And so my feeling is that it's going to pass. That's just my 2 cents. Yeah.
And this thing was very political. This is all about getting the election. So this thing is a joke. I will never vote for it. It's going to be horrible. And that's just my opinion. And these guys in Tallahassee ought to be ashamed of doing it, but they just think they're God's gift. And oh well.
Well, it's also, it takes away authority from local taxation. The budget shortfall that Florida Tax Watch is projecting, that's countywide. This is not going to affect the state coffers. The state is not going to reimburse counties for the lost revenue. These counties are going to they're stuck with the cut. So they're stuck with the revenue shortfall. There's no way that, there's no state income tax. The sales tax is already pretty high. I don't think there's a whole lot of push to raise that. What's going to happen is you're going to see increased non-ad valorem assessments, increased millage, and increased fees. Now, to the argument that you think it might pass, it may not, I don't know. But the only people that would benefit from this would be existing homeowners. I mean, in the population of Florida, there are a lot of people that don't own their home. And, owners like yourself of commercial properties, you're going to see the increased burden, and you're not going to just eat that. You're going to pass that on to your renters. So you're going to see rents increase. And I think a lot of people that are renters and things of that nature, they would most likely vote against it. And I don't think anyone that works in county government, city government, or any government service whatsoever is likely to vote for. There are no unions, police, fire, sheriffs, all those organizations are against it. I don't know. I don't know what's going to do, but it may pass, it may not. 60% is pretty high threshold. Yeah.
Well, Mr. McCarville, thank you very much for being here and for helping to explain Amendment 3. So everyone, I'll just comment as a customer and as somebody who tried doing an appeal himself and failed miserably. You're going head to head with professional appraisers, so don't bother doing your own appeal if you're not pretty savvy about appraisals, because they'll rip your evidence to shreds if it's not pertinent, as you said. So thank you again